Hello traders, this is Blake Morrow and you are listening to the week ahead video for March 22nd, 2020. I want to say I hope you guys are having a great weekend at home. If I sound a little sniffly, it's because it is allergy season here in Arizona. Well, most places, but I I do get affected by it. And it's funny is, well, it's not really that funny, but when you like you have allergies, for example, and you're like, wow, my nose is a little tickly, and then you start thinking, well, maybe it's something a little, it's not quite, maybe it's not allergies, but it is just allergy season, and just got to get over it. Anyway, we've got a lot to cover today. It's obviously a very important, point in time that we're dealing with the markets. I'll talk a little bit about ForexAnalytix in a minute, but what I do want to do at this point in time is spend some time talking about where we're at in equities, because equities are driving the boat right now. Well, I could say equities are driving the boat, but the US dollar is actually driving the boat, co-driving the boat with the equity market. So let's first and foremost, let's talk about equities. Okay, let's talk about the S&P, and I'm pulling up my charts because you can go on ForexAnalytix and read the analysis that's here, whether when you're looking at the S&P, whether it's Elliott wave analysis, harmonic analysis, basic technical analysis, yada yada yada. And those are still getting updated through the weekend. They should be updated by later today. But so I wanted to just give you like my take on where we're at, and I wanted to look at not just the S&P but other markets as well. So we've got the S&P that I have to point out, since the financial crisis, and now look at where we were at in the financial crisis at 666, which is the Haynes bottom. If you don't know why it's called the Haynes bottom, it's not because of Haynes underwear, it's because of Mark Haynes. Mark Haynes, when we were at 666, he called the bottom basically, and he unfortunately he had passed away. I want to say like maybe a year later, 6 months later. But Mark Haynes, probably one of my most favorite of all time, commentators or reporters on CNBC. But anyway, look where we're at now versus where we were back then. And I remember when we were around these levels, around the 800, 700 S&P levels, and I remember looking and thinking at that point in time, wow, this is the end. This is the end. I'm sure some of you are looking at the S&P right now or thinking, wow, this is it. And guys, try not to panic here, but I do have to say that there probably is more downside in the equity markets. If you look technically, we closed below a 38% retracement this week, and we closed new trend lows. We are at the inauguration levels of Donald Trump when he was inaugurated. When he won the election, it's down here at basically 2000. That night was the low, but in my opinion, we do have some downside. Probably near term, probably down here, back to where election night is. It's probably somewhere in this level. Now, if you probably want to see other markets too and wonder where that downside, where further downside is. I believe we're going down here in the S&P, but I also believe we're actually going further than that. I think we're going to be seeing the 1600, 1800 levels in the S&P longer term. We obviously won't go to these levels in one fell swoop. There's going to be oscillations, and we're going to probe, and then we're going to bounce, and people are going to think it's the bottom. Then but we really haven't seen quote unquote panic yet in the markets. Yes, we are selling off, but we really haven't swayed the long-term investor. I don't think at this point in time that the markets are toast, right? And usually that's the point where we do see some sort of capitulation. Right now, there's a few things that I want to see before I'm confident that the market is going to bottom. And you know, bottom, you got to use that term very loosely. I think the economic impact of the virus is going to be quite substantial and quite long lasting. So that's why if you follow me on Twitter, you've maybe heard me say that you know, I'm looking for more of a an L-shaped recovery versus a V-shaped recovery, because I don't believe that we are, you know, we're in a the what's causing the sell-off in equities is not, you know, it's not economic, it is a pandemic. So, you know, we are going to, it's not going to be an immediate recovery. A V shape would look something like this, right? Right? That I'm not expecting. What I'm expecting is more of an L shape, which will probably look more like this, you know, like this, and you know, then a recovery. You know, that doesn't mean we won't get a you know, maybe I should redraw that a little bit. That won't mean we won't see something like this, you know, but that's more of an L shape versus if you're expecting some sort of V-shaped recovery. I really don't think that is what's in store, because of it's a global phenomenon, and even though we're going to get past it, it's going to do some long-lasting damage to our economy, not only our economy but the global economy. So you know, and maybe I'm wrong. I'm just, you know, just giving you my thoughts here. And so if you look at the S&P, you look at like where the NASDAQ's at. You know, I was taking a look at the longer term NASDAQ. This is the financial crisis lows. We haven't even gotten to the 38% retracement yet. And you know, technology is always going to be where it's at, in my opinion. We are a very innovative race, the human race. I think the NASDAQ is going to be probably the first to recover at some point. But you know, where is that? Is it here? Or is it here, you know, or I'm sorry, I didn't stay in drawing mode here, or is it here? You know, I'm not sure, but again, I don't think we're close to the bottom yet. And one of the things I'll be looking at to really identify that a bottom is coming is when we have a good handle on the virus. You know, when you start seeing cases level off and deaths level off, and the market can get a grip around you know, what we're dealing with on a human live standpoint, I think that's when we'll see some sort of bottoming, or you know, at least the hopes of. All right, the other thing that I wanted to say, and that's something I did tweet about, I've talked extensively about it, is, you know, if we go on a lockdown here in the United States, I actually believe that might create a little bit of a panic, but that might also create a near-term bottom, because we can then stop and assess, have a better idea to assess where the United States is, not just, you know, everybody around the globe is going on lockdowns. Once we can do that here in the United States, we'll have it. We can then, moving forward, assess where we're at with the virus and how quickly it's spreading. I don't know if this administration is decisive enough to make those hard decisions, but I actually believe that would create some sort of low in the stock market. Now, if you look at like the Dow, for example, you know, this would be the you know, megaphone pattern. I know a lot of you might be tempted to say, well, this is it, you know, we're at support. You know, again, if you look at where the S&P's at and you look where the NASDAQ's going, you know, I would assume that we're probably headed towards lower levels in the Dow. But that does, like I said, that doesn't mean that we won't get some bounces. Now, I know I've focused a lot on the on equity markets, because, like I said, I believe it's driving the boat. Now, keep in mind we're coming into month end. Being in month end, you're probably going to continue to see some dollar denominated month end demand. So we've seen it across the board. We've seen the euro rally. We've seen even the dollar yen rally. We've seen just the dollar rally in general. I believe the dollar is going to continue to explode higher. Not to mention that we do have PMIs coming out in Europe on Tuesday, which are probably going to be not so good, and I think that's going to help fuel this dollar rally. If you think about longer term, actually, I'm on this weekly chart of the dollar index. And sorry, I have to focus on these weekly charts because I got to think about, we've got to imagine breakout coming in the dollar. This has always been a big resistance. You can see the dotted line. I've had this dotted line up there for, I want to say a good, maybe year and a half, 2 years. Obviously, when you're dealing with charts that look like this, you're not even looking at that dotted line. But now that we're there, you realize the 103.50 is, a big deal. From, it's not only resistance from way back in 2016, but it's also previous support from back in '02. Chances are that the dollar index is going to continue to explode, maybe towards 110. Now, if you think, wow, 110, where does that put the euro dollar? Well, that puts us probably near parity, if not below. So, the euro has done an absolute number on the market as far as, breakout. Now we're in breakdown territory. So I think while we are below, let's call it 107.75, which was the breakdown point, you've got to continue to believe that the euro is going to be pressured. Okay. And I think that's important to realize when you're trading the FX, like, hey, if the dollar is going to continue to be in demand because equity markets continue to stay pressured and, the flight to safety is there, then you've got to continue to focus on the euro on the downside. Cable's made a really big move, and yeah, we are at probably some pretty key support down here in the pound around the 115 level. But what's to say that the cable can't see 110? Like 161% extension of the last move up, which takes us down towards 110. I mean, if the euro's heading to let's just say the euro's heading to parity, the cable could very easily see those levels as well. So I know it's very tempting as a trader to try to play counter trend, but that's not always the case. Now, one of the trades that I think is going to be the trade that we really need to pay attention to, I'm going to cover here in a second. But first, let me just tell you this. Going back to ForexAnalytix, guys, if you haven't tried out ForexAnalytix, last week on Monday, my partners and I, we decided, hey, we need to. There's so much volatility in the market, and we've seen a lot of people, come through our doors, looking for help, because we have this great community of traders that are in our chat rooms and use our platforms that we're like, well, we need to, offer discount to make sure people have a safe place to go. And we're running a volatility offer. These are really good prices that we normally don't offer at this point in time. But like I said, we've seen a lot of people come in, and let me just show you really quick when you're logged in ForexAnalytix, and let me remove the data flash. That's our shows us when there's news events coming out, which aren't really too relevant right now because everybody's more focused on what's happening in the markets versus economic data. Like, I don't even care that the Bank of England is this week. I know they're on Thursday, but I really don't care. It's not relevant. So, but this is the chat room for ForexAnalytix, and let me show you how to get there. See that little icon right next to your face or your name? You go to that chat room, and then you can see where we're at. And let me just show you. This is, no, no one's talking over the weekend, but you can flip through and just see how much conversations go on and what we're talking about. We keep 3 days worth of chats in here because we can't house that much data. I mean, because there's so much talking between us and everybody else, and putting up charts and and just talking about what we're buying, what we're selling, and what positions we're taking. I want to give you an example. If you go over to where it says files list, and you can see all the charts that we post and we talk about. Let me see. I know on Friday I talked about, here's the S&P daily chart. Okay, so you'll notice my commentary. This was, it said the time as 4 o'clock in the morning or 3 o'clock in the morning or 5 o'clock in the morning or something on Friday. This is the S&P daily chart, right? It says, hey guys, I know it's hard to see, but this is the S&P daily chart. We stopped at the broken trend line. That's this, broken trend line right there, right? We stopped this broken trend line, which is the underside overnight. My guess is while we're below today's highs, we are still in a downtrend here, FYI. We were trading below 2,500, and my 2 cents was that as long as we stay below 2,500, there's no reason to be on the long side of the S&P. And you can see that that was, early in the morning on Friday, and we just were challenging the underside of 2,500. This is the, broken trend line here, and then what was green at one point eventually turned red because there was selling into the end of the day. And I'm going to tell you guys right now, while we're below 2,500, I don't think there's any real reason to be long the S&P. And even if we bounce, where are we going to go? We're going to bounce to 2,700, and then we're going to look for opportunities to sell up there. But that's just to give you an example of things that we talk about in the chat room. So if you want to be part of ForexAnalytix and part of the family and be able to chat with us, take advantage of ForexAnalytix, and then also make sure you download the mobile app, so this way you have the app on your mobile device, because with the 24-hour market, it's hard to be in front of your computer. I mean, I'm in front of my computer probably 12, 15 hours a day. And the other few hours a day, I'm looking for, where's, when these support resistance levels get breached, let me know. And, the app will do that. So, anyway, I just wanted to mention that. Now, I want to talk about the one last thing. When I say we, I should say global central banks have thrown a lot, almost everything. You think the kitchen sink, but if you talk to my partner, Stelios, he'll tell you that he believes that the Fed's going to end up throwing about 4 trillion at the U.S. economy before it's all said and done, and we're running at about 2 trillion right now, are the best estimates from the Treasury Secretary, and and what he's saying as of today. We're talking about close to $2 trillion. Well, with all this money flooding the market, and let's just imagine every central bank's balance sheets can continue to expand to support the global economy, inflation is going to become an issue at some point. And if you look at asset classes like gold, I believe that gold, and just so you know, gold has still not completed its pennant. So its pennant still points to 1750, and gold is at some support here, and it's not breaking into lower lows, right? I wanted to be alerted. You can see I have an alert set up there. I wanted to be alerted that if we broke below 1440, gold, you can stick a fork in it, because now we're making lower highs, or lower lows, but we're being supported right now. So I'm thinking that because of what all these central banks are enacting, gold is probably, I know that our targets look at 1700, but I wouldn't be surprised to see gold surge past 2000 at some point, as people look for places to put their money, not just dollars, but do I need an inflation hedge, something tangible like gold, like silver, something that I can touch. I think the idea that Bitcoin is going to rally, I mean, it may, but I think investors are going to want something where they say, hey, I can see and touch that. So I think gold is one of those, you have to watch it here, and I'm really looking at a break above like 1520, 1525. That's when you start getting higher, intraday you start getting higher highs, and we're already trying to form higher lows here. So I think gold is probably the place that we need to be looking at next week, especially if you want to avoid some of the volatility of the FX market. Now, one last thing I should talk about, speaking of volatility, we're seeing trading ranges. I mean, when you have 4% moves in the Australian dollar in one day, that is massive amounts of volatility. So make sure you guys are trading with smaller position sizes, not bigger, smaller, because just as quickly as it can, work in your favor, it can work against you. And my hope is, and my goal is, and it always has been with ForexAnalytix, and even before when I was with, Ally Financial and Wise Trade, and is just to make sure that you guys as traders and investors are here to fight another day. So make sure that you're not over leveraging. Make sure you're, not hesitant to take a loss. If something's working against you, get out. Take a loss and reassess where you can, find another opportunity. But if something turns against you, the way things are moving right now, they could continue. And so don't get yourself in a predicament. Find the levels that you want in, get in, keep your stop tight, keep your, position sizes small. If you're wrong, take it, like an adult, get out and reassess. And if you're in a nice gain, take some profits, move your stop up to break even, and maybe try to ride it out, but at least try to be taking profits along the way. Because I'm fearful for a lot of new traders that are in the markets that really haven't seen this type of volatility, that are going to have a tougher time managing risk. And like I said, one of the best places and one of the best things you can do is being part of the ForexAnalytix family and being in our chat rooms and talking with us about, hey, what am I looking at here, and where can I be, looking into to buying this or selling that. And you'll get comments from those of us that might be trading it or might be looking at it as well, whatever asset class that you're looking at. So mostly obviously because of what we do, it's going to be currencies and indices and precious metals and maybe some commodities markets. But anyway, guys and gals, I hope you have found this video beneficial, and if you have, make sure you give us a thumbs up on YouTube. I know it was a little longer than normal, but obviously I had a lot to talk about this week. I will be on the F.A.C.E webinar tomorrow morning, as I always am on Monday mornings. Hopefully I'll just pop some allergy medicine here in a little bit, and I won't be as so nasally. And you guys, please take care of yourself. Stay safe. Wash your hands. Isolate yourself if you can, if you have the ability to do so. We've been in self-isolation, my family and I, for 8-9 days now. We decided to do it last weekend, and we're trying to do our part by just staying home, and hope you guys can do the same. All right, have a great remainder of your weekend. I will see you tomorrow. My name is Blake Morrow with ForexAnalytix. Have a great one.